Hello and welcome to Inside Modular, the podcast of commercial modular construction brought to you by the Modular Building Institute. Welcome everyone. My name is John McMullen. I'm the marketing director here at MBI. Today I'm joined by Danny Langerman, CEO at DHA Financial. Danny is here to talk about new financial opportunities for modular home builders, manufacturers, and developers. Danny, welcome.
Thanks. Appreciate it, John. Thanks for having me.
So tell me about yourself, Danny. What's your background and how did DHA Financial come to be?
So originally, my wife and I are actually from Madison, Wisconsin, went to school at UW, and then moved out to Denver in '94. And when I moved out, I actually got into the stock brokerage business. And then in 2001, my wife and I formed DHA Financial. So we got into the mortgage business back in 2001. Set up our company then, had a couple employees at the time, and we've been enduring and thriving ever since.
Before we dive into too many more questions, I just wanted to thank you for attending World of Modular. I met you a couple of months ago in Orlando. How was that experience for you? I think it was your first time, right?
It was. And actually, it was, with the program that we have, and I'll explain it, I guess we'll go over it here in a little bit, but it was, for us, it was a chance to get out and introduce this program to the building world, and modular came up, and both my wife and I went, and we were at the expo, and it turned out great. The amount of people that was there in Florida and Orlando when we were there was actually really surprising, and the products and the builders, the manufacturers, the developers. It was an awesome experience, and I appreciate the invite.
No, excellent. I'm glad you were there. It was good to meet you. So you mentioned you started DHA 20 years ago, and I know the past 20 years have been full of ups and downs, huge ups and huge downs for the mortgage industry. So tell me about the mortgage sector now. What opportunities are there for companies that might want to offer them?
So right now, I think that with where interest rates are at and where the economy is, and where all the investors are looking as far as inflation goes, I feel like we're topped out on interest rates. So I think that from here going forward, I think is going to be an excellent opportunity on the mortgage side of things to be able to generate additional revenue, to generate business. I think it's going to be great for everyone. For the modular side, home builders, stick builders, the entire industry. So I look at now as a great time to really capitalize on the mortgage sector, when it comes to, in specific, I can just I'll stick with the modular home building industry.
What services does DHA offer that might really appeal to modular builders and manufacturers and developers?
So right now we are a mortgage company, plain and simple. Like you said, we've been in business for 23 years. We lend with our own money. We have in-house underwriting. We have in-house processing. We fund and close in-house. We have all the essential loan programs, FHA, VA, USDA. We do construction to perm loans, which is a great thing for the modular side. So, we can actually use our investors' money rather than having, builders or developers going to the manufacturer and having to put up, a bunch of their capital in order to start the modular process. But first and foremost, what we've come up with and what we've started to really introduce this year is we came up with a RESPA compliant joint venture mortgage program, to where now builders, manufacturers, even developers, within the modular world can own their own mortgage company, and it becomes an additional, layer to their vertical, to where they can add profit to what they're doing right now, rather than just hand out this additional profit to the larger banks and other mortgage companies, where they're really not getting anything in return except for perhaps coffee or donuts every 6 months.
So as a mortgage company, tell me about some of the products that you offer. Are there different levels or varieties or types? Tell me about that.
So we actually, for us, again, we're being a standalone mortgage company. We have all the products that are offered out there. If there's a product that we don't have, we can always look into it. But currently, we have products like conventional VA, FHA, USDA loans. We do construction loans as well, one-time closes. We can also do reverse mortgages, which are purchases. And then we also have a program too, where we call it our contingency loan buster program. So what we can do is we can actually eliminate the contingencies for builders, manufacturers, or developers. Eliminate those contingencies where the buyers are selling a house, but in order to qualify, they actually have to have that house sold before they can buy a house that's being built. We actually have a program to where we can go in and we can purchase the house, from the builders or developers, and then wait for that borrower to sell their house, and then we're able to sell it back to them. So it will not interfere, with the forward direction that the builder or developer wants to do as well. So on top of that, and we have competitive rates. So if there's an interest rate out there that we need to take a look at in order to possibly compete with or even beat in order to get the business, I'm always up for doing that. And then, with all these kind of combined and stuff too, we rely a lot on technology as well. So our technology is going to make it as efficient as we possibly can, for both the builders and our partners as well.
Well, it's interesting you say that, Danny. I remember buying my house about 2 years ago. We ran into that contingency issue ourselves. We didn't qualify to buy until we had cash in hand from selling our house. And lucky for us, we had a place to go. But is that often come up in your business?
That's a great question, John. We have that come up, quite a bit, especially with our builder partners, is that you've got that contingency. You're not able to qualify with both homes. But what we do is we have an investor that will actually go in front of you and they'll purchase the home from that builder or that developer, right? And then what they'll do is they'll rent it back to you until you have your home sold. Once you have your home sold, then it comes back to me as the mortgage company. And then you will then rebuy that home back from the investor at the same price you would have bought it from the builder. So we've got that interim, investor that will help with that process. Now, keep in mind too that this type of what did I call it? I'm sorry, contingency will work only if it's a conventional or if it's a VA loan. So it won't work with an FHA loan, but if we can get around it, that's what we'll do. So instead of you having to go out and spend additional money and rent and have to store your belongings for another month, we can actually have you, move into the house. You're renting out that house from the investor. Once you sell your house, then that investor will go ahead and sell it back to you as you had intended to do.
So why, I guess is my question, why would builders and manufacturers want to vertically integrate and include these mortgage services? What advantages would that offer them specifically?
So, I mean, it's first off, it's already built into what they're doing right now. I mean, that's why you've got some of the larger, if I look at the stick builds and stuff too, you've got your Lennar, your Richmond, your DR Horton, all of them have vertically integrated mortgage companies within their business themselves. And they recognize that, number one, they can obviously capture that mortgage revenue and that mortgage income and that profit that's generated from the mortgages. The one thing, that I don't feel like they really capture is not only can you capture, the profit based off the mortgages when you have buyers that are buying the house, but rates right now are high and they're going to go lower. So now these builders, manufacturers, and developers, within the modular industry can also capture the refinances and the revenue and the profit that's going to be generated by the refinances when rates start to go down as well. So having an extra, again, it's an extra layer to their vertical and it generates additional revenue. I mean, in this type of world right now, if I don't know how many builders, developers, or manufacturers out there aren't interested in making some additional money on what they're already doing, I'd be pretty surprised.
So how would they go about that? I know many manufacturers are very good at what they're good at, and that services like these, might seem to stretch the existing resources that they have. Are there certain steps they might need to take to get started?
Yep. So first off, all you have to do is give me a call. This is a plug and play model. So we don't have it to where they've got to get licensed. They've got to get all this, additional work done. No management, really needs to be done. So it's revenue that they're generating. They become partners with us, and what we do is it's more or less a percentage of distributions that they're able to receive once we generate this the mortgage revenue, and it's distributed to the partners every month. So it's a very simple plug and play process. All you have to do is give me a call, and I'm happy to go over the program myself with them.
Are there other partners that you've had who've successfully added these mortgage services to their verticals? Or are you able to share any information about how that went for them?
Yep, yeah, we've had multiple other partners. We've got builders. We actually have a home warranty company that's partnering with us, along with obviously realtors and teams of realtors as well. So it is we started the program out in back in 2018, and so we just kicked it off this year, which is 6 years later roughly. So we do have proof of concept, and we've had partners and stuff that obviously are enjoying the benefits of adding an additional revenue source to what they're already doing.
Are there any additional hoops that modular manufacturers or developers might need to jump through as opposed to stick built or anyone else?
No, it's very similar stuff, and actually, I think that if it's hoops, it's more or less kind of with the stick builders more than it is with the modular builders, because we can actually save the modular builders instead of them, going to a manufacturer, instead of them, the builders having to use 50% of their own capital to start the build with the manufacturer. We can actually contribute a percentage of that as well up front to save capital for that builder, and then we can also do a final distribution, or not distribution, but a final payment to the manufacturer to save even more money to the builders themselves. So it's less capital out of pocket for the builders and the developers, towards the manufacturers, which not only, if they don't have to spend that money or that capital up front, they can save it, and they can actually build, you can increase their volume and obviously save them more capital, and we use an investor's capital rather than their own.
I feel like I've missed a question. I know financial things are not really my strong suit. Is there any other information that you think modular manufacturers, builders, developers might need to know or want to know about this program that I haven't thought to ask?
Yeah, I mean, the big thing is there is a capital. What we do is we set aside stock within our company, and so there is a capital purchase within our company, and you become owners, or the builders and manufacturers, developers become owners within our company, and then they actually own their own mortgage company going forward. So, there's a capital investment with it. It's a small capital investment, and we can go over how quickly the return would be. But I think it's something definitely worth looking into, and I think a majority of builders and manufacturers will find out that it's extremely beneficial to add this layer to their vertical.
I'm glad I asked, because that answer really actually helped clear things up in my head. So thank you. What's next for DHA? How are you guys looking to grow over the next 3 to 5 years?
So for us, right now we're licensed in 4 states: Colorado, Florida, Idaho, and Texas. So we've kicked this program off. And the one thing that we've decided is, if there's a state, or if there's a manufacturer, if there's a builder in a state that we're not licensed in, and they're interested in partnering with us, we want to go ahead and expand into that state. So our growth, or our goal right now in the next 3 to 5 years is to expand in as many states and partner up with as many builders, manufacturers, and developers as we possibly can, so we can grow the product and what we have, and offer this sector, the modular sector, something that I don't think right now is being offered.
And how can interested companies, wherever they may be, how can they get in touch with you?
So we're members of MBI, and also obviously they can give you a call, but they can give me a call directly at my office, 303-733-3922, or also send an email out to me at dlangerman@dhaloan.com. So by all means, I'm available 24/7, just like any other self-employed business person is. So feel free to call me anytime.
Very good. Well, Danny, I really appreciate your time. This was educational for me. I hope it was for other people. Thank you again.
Yeah, I appreciate it. Thanks for having me, and I appreciate it as well.
My name is John McMullen, and this has been another episode of Inside Modular, the podcast of commercial modular construction. Until next time.